Welcome everybody to Easy Options. We are going to be going over a strategy today that's been on YouTube a couple times. It's been checked on and back tested on the Forex charts, and it's been done on a little bit of the futures, but it's never been done on normal stocks and commons. So we're going to back test it on Tesla. Tesla is obviously what we trade and scalp most of the time. Like I would say 75% of the time in our room, we are scalping Tesla. We're not scalping much else just because of the movement. It's cleaner. We do obviously take other trades a lot of times, but when it comes down to scalping, we're basically doing Tesla. Now, this is interesting because you can do this on a 15-30 minute chart. We're going to test it on the 15 minute. So it's kind of in between scalping and you can set your stop loss and your take profit and kind of walk away. It's not something that you're in and out in 10 seconds. Like a lot of true scalping plays and stuff like that. So we're going to get into it. Let's talk about the indicators and the actual strategy. Okay, so what we have is the Cmf indicator. We have it on the default settings. We're not going to change anything. It has a zero line. The difference between the CMF and MFI is the MFI acts as the money flow index acts as a RSI chart almost, where you have an 80 line and a 20 line. The Heikin mini flow is just a zero line, so we're gonna use the CMF for this, and then we have your MACD. So very basic, very simple. A winning long strategy or trade looks like this. We have the MACD trending above the zero line of the histogram, right? And we wait for a cross up on the MACD, as well as having the CMF over the zero line with that cross up. So all those three things have to align in order to take a long. So you're not going to take every entry of the MACD cross up because that's just not a strategy within itself. We use the CMF as almost a filter in order to take better trades. So what we're going to do is we're going to back test longs and we're going to back test shorts from January 1st all the way until now, and we're going to show how much you would have made winners and losers over the course of that time. So let's get into the back testing. Okay, the back testing is complete. We had 22 winners and 4 losers with a 1.5-ish risk reward ratio. But something that I discovered as I was back testing this on the 15 was if you're gonna use this as almost a swing entry, and you're looking to capture bigger moves, you're gonna have to have a higher risk tolerance with your stop loss. You're gonna have to be more down here and let it kind of ride out and go into the future and be okay with seeing some red sometimes. Now, I actually think this strategy works better for scalping. And here's why. So if you're taking options, and this is what we usually take in our room is options. We train people in options, understanding decay, understanding how the premiums work and how the premiums move and everything like that. Something that I noticed with the strategy was you can capture very quickly $5 to $6 moves and only be risking a $2 move. So what that means is, let's say if you take a Tesla call and the premium is, it's $8, so it's $800 by one contract. So you buy that one contract, that $5 move is going to move that contract most likely near 10.50 to maybe 11.25, if not more. Where if it's a two, and then on the opposite end of that, the stop loss, the $2 risk is going to be 7. So risking me about $100 to make $250 is a great risk reward over the long term if you have a winning strategy. So let me show you what I mean about this. So let's find a winner here, right? So normally you're like, okay, if we're gonna risk 1.5, nope, see, I got stopped out here. That's just with a 1. If we risk, even more, if we move our stop loss, oh, this could be a winner. If we move it down here, that's a winner. So that's the swing mentality, is trying to manipulate your strategies. Now, if you're doing scalping, look at this, right? look at the strategy here. So we get the cross up that the CMF and the MACD agree right here on this bar. Okay, so you enter at 628.96. Let's just say you get the entry right off the bar and you're watching it perfectly. Okay, immediately from 628, so let's call it 629, all the way up to 630.50. That's a dollar move, $1.50 move. So your premium's already up, you know, at least 100. Now, then you get another move all the way up to what? What's the tip of this one? 632. So you're looking at a $3 move in less than a half hour. And then if you want to hold through it all, you get a full move of $6. So that's what I'm talking about with this, is like even on low volume, which this is on the 15-minute, you can capture $3, $4, $5 moves very quickly without having, I mean, it never touches. It goes down to 628.52. That's 40 cents off of your entry, right? So let's look at another one. Let's find another one here. Let's go back a little bit more just to spread it out. Okay, so like look at here. Got to cross up at 9:30 right at the open. Your CMF and your MACD agree. It's above the zero line. It's above the zero line, crossing up. So you capture from entry at 721.86. On the next candle, it's 727, 721, 727, 721, 727. That's a $5 to $6 move, and then you're out on one bar play. You're out. You don't have to worry about it. You're out. Now let's look at this one, right? Okay, does this cross down? Let's look at this. This crosses down. This is subjective, but I think this crosses down here and crosses back up. It's above the zero line. So technically this is an entry signal right here. So you would get in at 776. What does this go up to at the peak? 780. That's a $4 move if you capture it. Let's just say you wanted to scalp $2 moves, $3 moves. 776. 778. You're getting out at the peak of this candle. I mean, if you're scalping, the risk to reward with the strategy is far greater and far better long term and over those 28 trades that I got triggered on since January. It actually probably was a little more, but I skipped a few just because of the after hours market and the light volume and stuff like that. Your profit would be incredible because your losses are so minuscule and so small and so obsolete that your profit taking is going to be huge. I'm thinking about using this as a scalping tool now. Now this is on the 15-minute. I don't love scalping on the 15-minute. I usually scalp on the 3-minute. I haven't tested the strategy on the 3-minute. I haven't tested it on the 5-minute. I haven't even tested it on the 30-minute. The 15-minute is all I've tested, and we had 22 wins with 4 losses, and those losses were only $2, $3 movements, so you're only losing $100, $150 on average. Premiums obviously move different in different days, and decay rates, depending on the day of the week that you're taking. If you're playing weeklies, it's going to be different. And we can talk about that in a different video, but in the general rule of thumb here is if you want to use the strategy, I think the best way to do it is to scalp it. So if you're someone who is a day trader or is looking to get into day trading and wants to be in front of your computer and do this for real, this might be a good strategy to backtest on whatever you're using. I haven't tested on Amazon, ShopSpot, Roku, or any of that, but that's not to say it won't work on it. I test stuff on Tesla because I think this is a good standard for testing common stocks outside of Forex and stuff like that, because we don't do Forex in this room. We don't talk about Forex. We don't like Forex. Not that those people are wrong. It's just real scammy out there right now. So we just stick to options. That's what we do. In this strategy for options premium movement is really great. Oh, and one more thing I want to talk about the short side. The short side with the strategy, the CMF has to be below the zero line. And then MACD has to be below the zero line, crossing and trending below the zero line. You cannot take this short because the cross is above the zero line, right? It has to be down here below the zero line. I just wanted to say that real quick, and I guess I can find you an example on this as well. Let's see. All right, so we have this right here. Okay, so here's actually a really good example of what I mean about the scalping, right? So we have a short entry here. MACD is below the 0 line, crossing and making it cross down. The CMF is below the 0 line. Boom, entry. Okay, so you enter at 642. You have to endure 646, so it's a $4 move. Oh, you have to endure a little more, 648. But look at this move. 642, right? Down to what? 621. That's a $20 move. A $20 move. So it's all about risk tolerance. Now, would I probably endure from 642 to 648? Gosh, I don't know. I'd probably use other indicators. I would add on. That's something you guys can do, and that's where the subjectivity comes in. You could add on different indicators to say, no, I want to get out. So if you got out, you got out. But if you set your stop loss, let's say let's say this is like a level right here. So like, look at this level. This is actually a pretty good level right around here. Okay, so you have some support right here, and you have recent resistance there. So let's just set our stop loss there. So if you do it that way, boom, you're a winner. So that's what's important. I add levels as filters. Find your indicator, find your thing. Maybe it is levels, maybe it's a different indicator to tell you to get out or stay in. That's what you have to do. But I found this strategy to be very, very efficient. It's a wonderful strategy. As I said, you can build upon it. You can go short, you can go long, you can stay on trades a long time, you can stay in trades a short period, 1 bar plays, which is what I'd probably use it for, is 1 to 2 bar plays, scalping options for $4 or $5 premium movements. It's great stuff. Thank you guys for watching. I really appreciate it. Make sure you like and subscribe. And leave a comment below. We'll talk, we'll chat, and I hope you guys have a great weekend. Thank you.